Welcome to our monthly wealth community call for April 2023. My name is Nick Emerson, real estate broker and owner of the Emerson Group, Real Estate Wealth Advisors, where we specialize in representing real estate investors using the 1031 exchange strategy to buy and sell and build generational wealth. Today's call, I'm super excited to talk about, as we're going to dive into several clients that took the information and education that we've been offering through the years and took appropriate action with the 1031 exchange. So we're going to go through 3 client case studies that we helped out over the past couple of years to help give you some good ideas and variations of different types of exchanges that we put together and what their story was. So before we get into the case studies, I want to make sure I just quickly give you guys a refresher as to what are the different options available to you to exchange into. But with a quick overview, we're going to go through the options, the motivations of why investors exchange, the case studies as mentioned, and what is the cost of doing nothing, which you'll be surprised. So quick refresher of what you can exchange into. So, and also this is a quick definition of what is a 1031 exchange per the IRS, right? In a 1031 exchange, that is property that is sold or purchased. It must be held for investment purposes or for the productive use in a business or trade. So this must be a non-owner occupied asset or for your business. As you can see, a lot of people are surprised at how many options are available to them. Naturally, we have the single family, townhouse, condos, right? Your duplex, your triplex, vacant land. We've got commercial spaces, right? Industrial, office, retail, hospitality, which we're going to go through a warehouse situation today. Fractional ownership, right? So this is, most of you might be familiar with a Delaware statutory trust, right? This is where a large institution will buy a large asset, and then they will take equity positions from investors to help fund and close the deal. Or they already own the deal and they're looking for you to become an equity partner. With those, you do not actually expose to the ownership rather than just passively receiving a check. Some other options that are a little more unique are cell towers, billboards, windmills, which, believe it or not, if you've ever driven out to Palm Springs or in the desert area, each one of those windmills is separately owned with an APN number. So you can own one or multiple of those. Other options would be air rights, water rights. We've got Mike Bowen, great broker of ours, who helps us out with the oil, gas, and mineral rights out in Texas. That's something of interest. And then lastly, rounding out with boat docks, moorings, which are those buoys you'll see out in the water, and cemetery plots, which I trust most of you will not probably be investing in. Next thing is the exchange motivations, right? Why do people exchange? Well, most people assume that, well, you're going to 1031 exchange because you want to improve your cash flow or buy a better asset. Well, yes, that's certainly a reason why people do a 1031 exchange. And yet there's many other reasons why people do 1031 exchanges. So as a quick recap, cash flow, they want to improve their cash flow position as far as how much net income they're making per month and per year. Depreciation, this one is very common for us, right? A lot of clients who own properties for a long period of time, right? Set and forget, except they forget that after 27 and a half years, there's no more depreciation. So you're no longer pairing your income with an offset, which means you're generating less return on your investment. Next is appreciation. So you might be looking to take properties that are in lower appreciating states and move them to higher appreciating states, similar to California and the San Diego market. Conversion, you might be looking to turn your investment property into your forever home, right? We've talked about this before. It's an opportunity for you to convert one of your properties into a property you can move into for retirement. So that's a very popular one right now with baby boomers as far as finding ways to mitigate taxes and enjoy the wealth they've created. Consolidate and diversify, that could go either way. So we'll go through an example of consolidate where we took 2 condos and bought 1 property, or the other way around, which is you sell one property and you buy 3 properties, which is another example that we'll go over. A couple other ones would be reduced management burdens. So that's similar to a DST, right? Where it's completely passive as far as you get a check in the mail or to your account. There's no type of management involved in the asset. Estate planning. So this is a very common one as well, where we recognize not every kid wants to become a landlord. So rather than wait for them to deal with it down the road, we help clients figure out how they can help their kids inherit properties that they actually want to own or that they could in fact move into as a primary residence, or even move into now and pay fair market value rent. Lastly, use in profession, right? This is a tremendous opportunity if you own a business for you to stop paying rent, start building wealth, and invest in a building you can actually park your business in or park yours and other businesses in. So as you can see, there's a lot of different reasons why someone would do a 1031 exchange, and they're not always something you might think of intuitively, right? There's a lot of different layers here. So I trust with this information, you're going to think about how this might apply to you and which one might actually be your case or situation as to why you would be motivated to take action and conduct a 1031 exchange. All right, I'm excited to get into our first case study with our client Lilian and the case of the 2 tired condos. So Lilian was an out-of-state owner. She lives in Idaho and had 2 condos here in Adobe Falls, just off the 8 freeway. She had purchased the first one in 1998 and the second one in 2000. Both had been rentals through the entirety of this time period. So when we came in contact with Lilian, she was dealing with a tenant that was not paying rent. It had been about 3 or 4 months with non-payment. She also had a management company that had recently taken over her longtime property manager of over 10 years. And with that, she was dealing with issues with communication with them and just getting basic things accomplished. And then lastly, after we agreed to go take a look at the properties and do a walkthrough, we recognized that both the units were going to need some pretty substantial cosmetic updates to get the units either re-rented out or get the property in a decent shape for a sale. So I'll reference these photos here to give you a sense of what we walked into. As you can see, naturally there was some water moisture issues, a lot of dirty and uncleanly areas. Safe to say the carpet might need to be replaced. I don't know if you guys agree. And naturally, it was not presentable in the condition it was and was going to cost her tens of thousands of dollars to get both of them up and running again, as far as either renting it or selling it. So what were her motives? Well, one, we talked about her options as far as consolidating, right? Lilian was 90 years old at the time we completed this. One thing that was important to her is she didn't want to deal with property management companies from afar. She no longer wanted to deal with multiple properties out of the area. And she wanted to make sure that when her son did eventually inherit these properties, that he didn't have the burden of trying to sell these properties from out of state or just dealing with them as rentals. So going through this process, I want to just kind of help people understand what the action steps are and kind of what this looks like in priority. So one of the first things we did, of course, is review the market, understand what they're worth, what we think they could sell for, both as is and repaired. We also put together a budget for that so she can see if we spend X dollars, what do we expect to get in return as far as our investment on that? And then on top of that, what am I looking at as far as a tax liability, right? She's owned them for 20 plus years each, which if you know depreciation, were 27 and a half years. Plus, as you can see, the prices she bought them for, safe to say her adjusted basis was very low. What that means is there's going to be a much higher taxable gain on any sale proceeds. So after establishing there was a large tax event, if we did sell these, we changed the conversation to a 1031 exchange and what that would look like. naturally, she was interested in finding something that was close by in her hometown that would be far easier to take care of. And we recommended new construction, as we knew we wouldn't want to deal with any type of non-foreseen operating expenses or large repairs at any point in the coming years while she's retired. So the next step was to connect her with an agent in her reinvestment market, which was the Hayden, Ohio area. What happens in that process is allow her to get educated on the market, know what opportunities exist, what the price points are, what things rent for, and what I like to call provide a proof of concept, right? What that I change into, and what would that look like? That's really critical for our clients so they can understand that it makes sense and there's opportunities today that they can reinvest into, which gives them the confidence to say, this makes sense and I see the end point. The next thing is to prepare the condos for sale. Through that process, we go through, we get estimates, we discuss what the optimal budget is, and then we put together getting work started. With that, on these condos, as you'll see through some of the photos, we helped with pre-market repairs as far as carpeting, new paint, touch-ups, lighting, poles, knobs, fixtures, everything that's going to give us the absolute highest return on our investment. And then the other important thing is understanding the nuances of structuring these condos to sell and close in as close of proximity as possible. Why is that important? Well, we have 45 days after we close. So naturally, if we sell one and we don't sell the other, then we need to chunk down our reinvestment strategy. So for this purpose, we were able to put both the condos on at the same time. So here's what the sale details looked like. Putting both the properties on the market, we were able to get both of them under contract. And as you can see, the first one closed on September 15th, and the second one closed on October 6th. So we had about a difference of roughly 21 days. With that, after we deduct commissions, closing costs, and any other expenses for the repairs, which we were helped fund up front and reimburse at closing, we were able to generate a cumulative proceed for reinvestment of $847,000. So this is the total amount of money she would have available to reinvest into a purchase or purchases if she so choose. What'd she do? Well, 6 days after closing escrow, as you can see, offer accepted. She got her offer accepted rather on a new construction property in the Hayden Lake area, right next to her primary. So this was something that was going to be really easy for her to take care of as far as management goes. Even if she did hire a local management company, at least she knows where the property is, where the company is, and she can easily handle things if she chose. Secondly, it's new construction. So what we love about this is that we know she's not going to get that call where she needs to replace a roof. She has a main plumbing line issue. She needs to update the electrical system. None of that is going to happen. And what that means is a better return on her investment and less stress and time she has to deal with it, as she really wants to be focusing on enjoying the income and not the toilets, tenants, and trash. Lastly, as you can see, she did not invest all the money. So does that mean she couldn't do an exchange? No, actually, it means she did a partial exchange, right? So she had $847,000. She bought $700,000, right? So she had a difference of $147,000. So from that, she pulled that out of the exchange, paid the boot or taxes on that amount, and put the remainder of it in a checking account for a rainy day. So she had extra reserves. So what did we accomplish? So we were able to accomplish the sale of 2 condos, right? From start to finish, we were able to accomplish the sale of 2 condos and the purchase and close escrow all within a matter of 3 months, right? Something I want to really stress upon: when you've got the right people with a great plan and the appropriate education, everything gets accomplished exactly how it's intended to. right? We hear about people that maybe don't have the chance to exchange, or they have a failed exchange. Well, usually that's because there wasn't the appropriate planning. So what did we accomplish with Lilian? Well, we accomplished it all in 3 months. We moved the asset from San Diego to her home state here in Idaho. We reduced the operating expense burden, right? She's not going to get a phone call about needing to replace her electrical or upgrade her panel, or that she has a leaky roof, or that her water heater needs to be replaced. That's one of the benefits and beauties of exchanging into new construction, is that maybe your cash flow isn't as high, yet your monthly operating expenses are close to zero. And you're not going to be looking at large capital expenditures for many, many years until down the road. So for Lilian, that's peace of mind, that's simplicity. And on top of that, when her son does inherit the property, it's an asset that he could even move into as his primary. So it helps accomplish a lot of things that made sense for her as far as we're stressing her out or problems. And at the end of the day, she was able to make a phenomenal decision to get rid of these 2 tired condos and buy this beautiful brand new construction home. Great job, Lilian. Case study number 2, David and Roxy. From printing to profits. David owned a successful printing business and also the building. So he had owned this commercial warehouse building for over 20 plus years. And it was something that really benefited to help him with his business. And yet he had the privilege of retiring in 2021. With that, he no longer needed the commercial warehouse space. And mind you, this was during COVID. So things with commercial assets were very ominous as far as what's going to happen next. What does the commercial space look like with the new COVID era happening? And also, when I did come into contact with David, he was already trying to sell this property. So in fact, he had his property on the market for over 271 days. Normally, it's a good rule of thumb to make sure your listings do not have birthdays. So when we stepped in, it was very clear that we wanted a 1031 exchange. David already had the intention of wanting to figure out how to make this work for him and make sense for his retirement planning. And then we wanted to make sure that we've set him up, so him and Roxy, so that they were going to have income that they was dependable and they could rely on in retirement. Okay, so what were David's exchange motives? Well, he wanted to convert the property from business to investment use. They wanted to diversify into something they knew was going to be dependable for their income in retirement. And they wanted to find something fleet to quality. So what does that mean? An asset that we know is going to have a high demand for rents, is going to be easy to rent, and is going to see growth, right? So those are the exchange motives that we wanted to work through. And then we wanted to go through, what are the action steps that get us from start to finish? Well, the first thing is making sure that his listing did not have a birthday. So when we came in contact, the listing had been on the market for 271 days. We wanted to make sure we got him connected with a commercial agent that could handle the sale and get him where he needed to go. In doing that, we were able to connect him with a local commercial agent that was able to put his home up for sale, or warehouse rather, and accomplish a sale within a matter of 60 days. Now, while that's happening, it's my job to make sure that I'm educating David and Roxy on reinvestment options and what that looks like, right? Well, first of all, what's the estimated proceeds we're going to realize? How much will we have available to put into the next property? What are the locations that we want to focus on? When we first sat down and talked with David and Roxy, we were talking about anywhere from Ramona all the way down to Imperial Beach. So naturally, it was my job to make certain that we would consolidate our search area and really focus on zip codes and locations we knew were going to have strong rent and be consistent for them in retirement. Through that process, I was able to identify and underwrite roughly 45 properties that were active on the market. In doing so, we were able to identify a property that had room for improvement, appeared to be a little bit overpriced and was stale on the market. From that, we could realize at the right price, this could be the right opportunity. So we accomplished a sale of the Broadway property for $720, right, through the commercial agent. We had a total of $665,000 for reinvestment. Had he not reinvested the money with an exchange, he would have had a taxable amount of $620,000 as far as proceeds to be taxed, and then his liability on that amount would have been in excess of $240,000. Another clear example of why we are going to exchange into assets to continue to build wealth for money that we otherwise would have paid to Uncle Sam. Next, after we got through the sale details, take a look at the purchase. Property was a triplex located on 35th Street. The price was listed at $1.2 million when we were looking at the asset. So a couple things that we observed for opportunity was the actual rents were listed at a gross total of $5,545. The estimated market rents, as it stands, without doing major renovations, was already 17% higher or more. So we knew there's a lot of opportunity to quickly change the cash flow stream on this by either increasing rents or relocating and finding new tenants at market. Through this process, we were able to identify also that the agent had the property listed as accepted offer for inspections, meaning we had to have an accepted offer to see the property. Now, personally, to me as a buyer, that could be an opportunity for you. The reason I say that is because most people don't want to write an offer if they can't see the property first. Well, that burden becomes a benefit for the buyer. As we walk the property, we had an offer at 1.14. With that offer and having walked the property, we were able to negotiate a reduction of $35,000 to the asking price from 1.14 to 1.105. Through that, they were able to use some of that savings to help with minor cosmetic updates. So what was the outcome? Well, we converted his commercial warehouse from a non-performing asset into a multifamily asset, triplex. We were able to take his monthly net operating income, which was a goal to generate $1,500 a month. And we were able to get him into an asset that is now generating $8,300 a month. Right, that's over almost $3,000 higher than the amount that we had looked at when we were identifying the property for purchase. So this was a tremendous success story for David and Roxy as they took something that was not going to suit them well and they would have paid a lot of money in taxes on and converted that by using the 1031 exchange into a phenomenal asset here in the Normal Heights area. Fast forward to today, this property has already appreciated in excess of $400,000. And as mentioned, he's generating an income stream that far exceeds any expectations we had when we were in the process of evaluating for purchase. So great job, David and Roxy. And thank you guys for sharing your story to help educate our clients. Case study number 3, Travis and Michelle. The cost of doing nothing. Travis and Michelle purchased a 2-bedroom, 2-bath condo here on Mission Gorge Road in 2014. When talking about the asset, fast forward 6 years later, we recognized that the property was losing money every month, which caveat, some of that was a reflection of a 15-year mortgage versus 30-year mortgage. However, we also recognized that property had done tremendous as far as value. It had grown over $150,000 in equity in the course of 6 years. The problem, though, is that he's got a lot of equity in the property and no cash flow. Something that can happen over the course of time as your equity builds, right? Your regression occurs with your return on your equity. So we agreed the next steps was to understand what was his options for reinvestment and what would it look like if he sold the property outright. Identifying the exchange motives, we wanted to increase the cash flow. We wanted to re-leverage the equity so that we could make sure the equity was working for us and not working at all, instead of rather than not working at all. Secondly, we also wanted to diversify, right? We wanted to take this condo and turn it into an asset that was more investment based and allowed for more opportunities for growth in the rental income stream. The steps associated with that, of course, was to understand the tax liability that they would have if they did sell the property, make sure they were clear on what markets and the education around that. So Travis came to me and already identified Huntsville, Alabama, Phoenix, Arizona, and Orlando, Florida as 3 markets that he was focused on. And connecting him with 3 agent partners through our national network, Travis was able to get the education and insights he needed to double down and focus on Huntsville, Alabama as his primary target. How did he figure that out? Well, once he got familiar with the locations, the taxes, the insurance, the rental rates, it was very clear that Huntsville provided a unique opportunity for a lot of growth long-term, but also really good net operating income on each asset. Secondly, in identifying that market, we also recognized we were ready to take action and get the property up for sale for the condo. Through that, we organized that with the tenant and the closing to make certain that we were able to put together a deal that would be consistent with the 45-day identification period. So through this process, right, he already had a clear target on what he was looking for before we put the condo on the market. Right. This is something I want to stress over and over and over again, is that we do the work up front such that by the time we put properties on the market for sale, we're already clear on what we're buying, where we're buying it, and it's just a matter of finding the target when it hits the market. Lastly, we negotiated and accepted an over-asking offer that included extensions, right? This is another important piece to it, is that we like to build in options for our clients, meaning if we're going to close escrow in 30 days, we also have the right to add on another 15 or another 30 days if we are not finding a suitable property. This increases the likelihood of a successful 1031 exchange. Fast forward, let's go through the sale details. For Mission Gorge, we were able to accomplish a sale at $417,500. Proceeds for reinvestment, $255,000. As I mentioned, we had appreciated by $150,000 in 6 years for his condo. That's a 58% growth rate in a matter of 6 years. The total proceeds, had he not done a 1031 exchange, that would have been taxed, would have been $192,000, would have resulted in $82,000 going towards the state of California and Uncle Sam. Now let's get into his purchases, right? So what we're able to do is Travis was able to take the proceeds and he was able to use 25% down to buy 3 detached homes. So the first purchase, as we can see, $275,000 with a $68,750 down payment. Through this, what I want to point out to you is the average operating income. If we look at the monthly average, right? Every month, he was able to generate $674 of net operating income. That already improved his position from his condo by $1,100 a month by just buying one. His cash on cash return, right, which is his down payment and his net operating income. So you take the $8,093, divide it by his down payment. We've got 11.77% cash on cash. I don't know about you, but that's nearly triple what you can get here in San Diego at this time. Second purchase, not too far from Huntsville in a neighboring community. Purchased for $252,000 with a monthly average net operating income of $634 a month. And for the year, $7,612. So again, another solid cash on cash at 12%. Last purchase for $260,000 with $65,000 down. $702 a month in net operating income. So This one came in at 12.97% cash on cash. Also, a great benefit of having low interest rates a couple of years ago. Looking at the total reinvestment purchase, we purchased $787,000 of real estate, which was roughly $380,000 greater than his relinquished property. Also, we were able to repackage all the equity into 3 separate down payments for leverage, with gross rents totaling $57.90. So the outcome, this is phenomenal, right? We were able to take a 2-bedroom, 2-bath condo that was generating roughly negative $300 or $500 a month, right? For $3,000 for the entire year, take that income stream, which was negative, and turn it into a positive $24,136 for the year. I don't know about you, but taking negative $3,000 to $24,000 in 1 year is certainly something I'd be all in on. This was a phenomenal example, right? To understand what the cost of doing nothing would be had Travis and Michelle decided to keep the condo and not buy any additional properties. So I want you to take a look at this investment comparison, right? This is a big picture. What we did was I played out having owned Mission Gorge versus the 3 properties that he had purchased for the next 30 years. As you can see, if we're looking at the annual net cash flow, year 10, the condo would be generating $14,241. At the same time period, the 3 detached homes are generating $36,374. And as you see that play out through year 20, year 30, it's amazing to see the difference between the two over the course of time. And I think that's really important lesson that I want to convey here is it might seem like nothing significant over the course of a year or two, as far as maybe your situation and an opportunity that presents itself. But I really need you to zoom out, right, and get a big picture of what will this do for me and my family long term. This is also a great example of the diversification effect. And what I mean by that is rather than owning one asset, one condo in a appreciation state, he was able to buy 3 properties in what would be deemed a non-appreciation state. In bundling and creating 3 assets versus 1, what's phenomenal to see is that the equity is actually greater in Alabama, right? We would think that if you owned in San Diego and Alabama, that you're going to do really well in San Diego long-term versus Alabama. But you don't factor in the bundle or the multiplication account as far as 3 properties versus 1. As you can see with the property value, we're looking at a potential of $1.5 million difference between the San Diego condo and the 3 Alabama houses. So in short, lost operating income, right, or unrealized, $643,000 was not realized or would not have been realized had they stayed in the condo. Same with the equity, 1.5 million, as I said, of unrealized equity after 30 years. This is real money. This is for Travis and Michelle. They have 3 kids. That's a difference of his kids splitting $500,000 each less by just making this one change. So as you can see, I'm very passionate about this because of what it can do for you, right? The wealth that you can accumulate over the course of time by making smart decisions with educated professional representation. So what questions should we be asking ourselves after going through all this information, right? Are you clear on your current rental property performance, right? Do you know how much equity you have in the properties or property? Do you know what your net operating income is? Do you know what your property opportunity is relative to the rest of the market, right? Are you clear on if you had that money in your hand today, what could I invest in and what return would I get? A lot of people are not clear on these things. And what that means is it might not cause pain now, but the pleasure of taking action and what it can do for you and your family is huge. I truly hope that you take this information and are able to understand how it might impact you and what actions you might be taking that could help set yourself up or your family for generational wealth for many decades to come. The other thing I want you to be asking yourself is, are you in relationship with a real estate wealth advisor or a realtor? What's the difference? Well, with a wealth advisor, we're paying attention to and asking you questions about what your current assets are, what's your tax liabilities, thinking about things from not just, can I help you sell or buy, but what would this look like if we made this decision? What's 5 years look like? What's 10 years look like? Why are we doing this? And being able to give you the information and education to make smart decisions, right? What does a real investment opportunity look like? What are all the opportunities and who do I speak with? These are all things that myself and my team can help you with so that you can be a smarter investor and continue to build generational wealth for you and your family. As a quick recap, I want to give you a sense of how we can help you guys out if you're uncertain after this call. Couple things. One, we can go through your situation as far as your rental property's performance, help provide performance analysis for you so you can see what are we currently generating and how does that compare or stack up against the rest of the market. If you're interested in maybe learning more about our independent property management company with Leisure Life Property Management, Veronica would be happy to provide you with free rental market analysis or property walkthrough. And then lastly, if you just want to check out some of the other great information and education we have, feel free to hop on our website, and we've got all the webinars there ready for your access and education. And lastly, so glad you guys could join us on the call today. I trust you got value from this information, and stay wealthy.